Good day, everyone. Welcome to the video of the day. So, in August 2024, the Bank of Japan raised the rates by quarter percent, just a quarter percent. It resulted into crash of Bitcoin from $64,000 to $49,000 in just 48 hours, and it wiped off trillions in the global stock market in just a single day. Yesterday, the Bank of Japan has just raised the rates again to a 31-year high, and this time the world looks far more fragile than 2024. So, here are exactly what just happened and what it means for every asset you own. Let's discuss. So, what happened exactly? So, the Bank of Japan raised its benchmark interest rate from 0.75% to 1%, the highest level since 1995. That's roughly 31 years. So, to understand why this is significant, you need to know that Japan has been doing for this 3 decades. Since the 1990s, Japan kept interest rates near zero, sometimes below zero. That was their way of trying to restart a stagnant economy. Also, the ultra cheap money didn't just stay in Japan. Investors worldwide borrowed yen at near zero cost, converted it into dollars, and put it into higher yielding assets like US stocks, crypto, and emerging market bonds. This is called the yen carry trade, and it became one of the largest source of leveraged capital in global markets. Now, Japan is unwinding that slowly but steadily. Why now? So there will be two reasons. The first is inflation. So Japan's domestic corporate goods price surged to 6.3% year on year in May, driven by the Middle East war, pushing oil and resource price higher. The second would be that yen was collapsing. The pair currency of USD JPY hit 160, a psychologically critical level that historically triggers interventions. The Bank of Japan had no choice; it hiked. Now let me explain you the carry trade. So here's the mechanism most people don't understand, and it's the key to why this matters globally. So the yen carry trades work like this. You borrow yen cheaply in Japan, you convert it into dollars, you invest into Nvidia, US treasuries, Bitcoin, or any high yielding assets. As long as Japan rates stay near zero, you pocket the difference, free money effectively. So this way, trillions of dollars of global investment is funded. And when Japan raised the rates, yen borrowing gets more expensive. Investors starts unwinding the positions. They will sell their US stocks, Bitcoin to the emerging market assets, convert back to yen to repay the loan. That selling pressure hits everything simultaneously. So let me give you an example. In August 2024, a surprise Bank of Japan hike crashed the Bitcoin from $64,000 to $49,000 in just a span of 48 hours. The Nikkei fell 12% in a single sessions. It's the worst day since 1987. And US stocks, tech stocks mainly, got hit hard. Again, yesterday's hike was widely expected by everyone. Market at the price of 96% probability. So the intermediate crash didn't happen. The Nikkei actually hit 70,000 for the first time ever today. The carry trade held for now, but markets see Bank of Japan rates heading to 1.5% next. Every step higher tightens the screw on the carry trade a little more. Now, let us talk about the global domino. So here's the bigger picture, and this is the story nobody's connecting. So Japan didn't hike in isolation. The ECB rates to 2.25% approximately last week. Its first tighten in 3 years. Indonesia hiked, and now it's a turn of Japan. So a question will come in the mind of the people that why are all they hiking simultaneously? The main reason which reports are getting is that the Middle East war drove oil price to near $96 per barrel, which fed inflation across the globe. Central banks had to respond. There was no chance or no reason to accept. The war is now coming to end. The Iran peace deal was signed yesterday. Oil is falling, but here's the brutal irony about it. So the inflation that war cost is already baked in. Central banks can't unhike just because oil is falling. They have to wait for inflation data to confirm the trend. That takes months. Meanwhile, US inflation is at 3-year high. The Fed emits is this week. New chairman is expected to hold rates unchanged for now, according to the reports, but expectations are building that the Fed may have to hike it. So think about what does it means if the federal hikes and the Bank of Japan keeps hiking. The gap between US and the Japanese rates narrows further down. The carry trade becomes less attractive, more unwinding, and more selling for risk assets. So Japan is the $500 billion ETF portfolio country, the yen carry trade, and a 31-year rate milestone all at once. It's the most important central bank story of 2026 that most retail investors aren't watching. So from this point of time, there are three things to watch here. It's not a financial advice. Always do your own research too. The first thing to watch it, the currency pair of USD JPY. If it breaks below 145, carry trade unwinds, accelerate. Watch this daily. It's your early warning signal for the global risk of moves. The second point to watch out is the Bitcoin in the tech stocks. These are strictly the first casualties of yen carrying unwinds. In August 2024, Bitcoin fell 23% as we discussed in 48 hours. Along with Bitcoin, already volatile, and AI stocks at stretch valuations, a disorderly carry unwind would hit both very hard. And the third point to watch out is the Japanese ETFs. So Nikkei hit 70,000, all-time high, unhedged. Japanese ETFs like EWG benefit from yen appreciation. Also, currency hedge funds like DXG neutralize that, understand which side you are on before you are in. So the Bank of Japan's next move is very critical. Markets are watching for 1.5%. Keep in mind, that's when analysts say a larger carry trade unwind becomes likely. The state of Hormuz reopening and falling oil price could slow Japanese inflation that potentially pose the Bank of Japan. That's your bull case for risk assets. So watch USD Japan. So I would suggest that the last time Bank of Japan surprised markets, Bitcoin crashed 23% in 2 days. This time it was priced in, but the next hike might not be. Make sure to like the video, share it with your friends, family, and colleagues too. If this connected the dots for you, make sure to subscribe. See you then. Welcome to Moneyway. Let's grow together.